Okay, so good day traders, hope you guys are doing very well. Now this particular video I made it specially for you guys. Now I've been reading you guys comments and I've been seeing the questions that come up like, what do you use, why do you use this? So in this particular video I'm going to be explaining all that process. Yeah, with that being said, let's dive into the chart. Okay, so right here we're on the chart and let's dive into everything. Now the first question becomes, what is really a strategy? As for me, I look at it in a way that a strategy are sets of rules that guide you towards getting an entry in the market and also an exit in the market. Now if you look right here on the charts, let's zoom on the charts. All we're seeing right here is candlestick. We're just seeing candlestick. Really, we don't have any much data to process here. We're just seeing that the market is going down, the market is going up. But in order for us to know what we are doing in the market, we need to focus on three major things. We need to focus on the trend of the market, where is the direction of the market really heading to, the support and resistance of the market, and the trend of the market. These are the three major things. So the way I form my strategy is in the premise of these three things. So like if I look at the market right now, when I look at the market, I want to know what the trend is. You understand? If I look at the market, is this an uptrend, is this a downtrend? Let it tell me. If I'm looking at the chart right now, is this a support zone, is this a resistance zone? I want to know. That strategy should be able to tell me that. And also, this is the support, this is the resistance, this is the trend. Like, is this the right time to really go ahead and take a buy now, or is this a good time for me to take a sell now? This is exactly what it does. Now, by the way, right here I'm going to share with you guys the key ones. So now if you look at the chart, the market is in a downtrend, you understand, because we are seeing the market in a downward movement. But to my strategy, I have not really confirmed that this is a downtrend. You understand? Maybe this could be a downtrend and this right here could be like the market changing. Now the way I used to find out the trend of the market is with moving averages. Now the two major moving averages that I use is the 9 simple moving average and the 25 simple moving average. So I already have this in my style, which is the important section. So I'm gonna add one and I'm gonna add 2. So once you've already added these two moving average, what you need to do is that you have to go to just pick any one of the settings, like let's say 9. Since the default right here is coming in with 9, we might as well just leave it. So right here we'll go to the style, and to differentiate what we're going to be doing, let's make the 9 moving average to be red. We're going to increase it just a little bit, so let's add in this one just a little bit, and then right here we have the 9 moving average. So this one is all set. Now what we need to do right here is that we need to go to the second one right here, go to inputs, and change this to the 25 moving average. So since it's blue, we leave it as blue, and then we give it a little bit of thickening so that we can see everything that is really happening. So right there we hit OK. So this is really it. Now right here, let me show you guys how I really use these moving averages. Now whenever the market is below this my 25 line, whenever price or this candlestick is below this my 25 line, I consider that the market is in a downtrend. Once I see something like this, what I'm really looking for in the market is just, I'm looking for sales. I'm not looking for buys, I'm looking for sales in the market. You understand? And whenever, just like in this area, the market is above my moving average, this right here, if you check it right here, whenever price is above this my moving average, I'm taking it that the market is in a buy. So all what I'm looking for when I'm seeing something like this is that I'm looking for buy positions. You understand? I'm trying to buy the market. I'm not looking for a sell position. Now how I told you that the market is in a downtrend, but my strategy could really tell me that the market is going in an uptrend. This is basically it. So if you see right here, the market is in a downtrend, but right here for me this is an uptrend because my strategy right here tells me that this is an uptrend. Because why? Price is above the 9 moving average, price is above the 25 moving average. So this right here, I will consider it a buy. Other people, whatever different people use, they can use it, but for me personally, I consider this an uptrend. By the way, I currently shifted the time that I'm recording this. A few hours ago we were talking about how this was going to be a change in trend, and so far as you can see from here, you understand, price has already gone above the moving averages, and
USD CAD is in an uptrend.
Now, I know some people will be asking, like, why are you using two moving averages? Why didn't you just use one? Now, why I'm using two moving averages here is to get like a general perspective of the market. If the market is above the 9 moving average, good, but I also want to see price above the 25 moving average to have that strong confirmation that the market is in an uptrend. If the market is going in a downtrend, I want to see price below the 9 moving average. I want to see price below the 25 moving average to have that strong confirmation that the market is in this downtrend. So basically what I use the two moving average for is for double confirmation. Now, one other reason I really picked the 9 moving average is because it really follows the market back to back. So if there's any small change in the market, I'll be able to notice that with the 9 moving averages. The 9 moving average, you can use it to get in an entry, get out of an entry, like as you're following the market, following the market back to back. While the 25 moving average is there to show you like what the market is doing in a longer period of time. Now, if you look at this area, price is below the 9, price is below the 25. So what this means right here is that the market is in a downtrend. So what I could do right here is that I could sell Euro USD. Let me get this short tool right here. So I could really just sell Euro USD, keep stop loss, above, let's say, this candle, and then try to sell it till whenever I see price above the moving average. The point that price got above the moving average is right here. So with this trade, I've been able to close like 1:4. Now you can still use this again to find in entries in the market. This same thing, you can see this point, market went above the moving averages. So this means that the market is in a buy. Now, by the way, for you to really get to know the points that you need to close your trade at, that's where support and resistance really comes in. That's when you really need to use support and resistance, than relying on the moving average to know when to collect your profits and every of those things. So you really need to know support and resistance. Trust me, when you add this to support and resistance, it will take it up a notch, that you'll be able to see points that you can just enter with the moving average, then close your profit due to you seeing like support and resistance at a particular point in the market. Now, the next one is when to really go ahead and place this trade. Now, this is where we're going to be talking about sessions in the market. Now, there are 4 main sessions in the market. There's the London session, there's the New York session, there's the Sydney session, and there's the Tokyo session. These are the 4 main sessions in the market. Now, whatever pair you're trading, you need to know the session that it really moves well in. Now, for pairs like, let's say, GBP USD, Euro USD, Euro GBP, these pairs move within the New York session and the London session. Now, I don't know where you're living in, I don't know where you're watching this video from. So what you have to do is that you need to check the time that these sessions happen in the market. So the London and the New York session kind of happen close to each other, kind of close to each other, let's see, some few hours apart, while the Sydney and the Tokyo session are kind of close to each other too. Now, as for me, I have the London and the New York session within the daytime. So what this means is that if I'm trading something like GBP USD, Euro USD, Euro GBP, I'm going to be trading all those pairs within the daytime. Now, you might be asking, why does this pair really move within the London session? Now, it moves within the London session or the New York session is because that is the daytime of that particular country. London is the UK, and UK use pounds. And also, if you think about London is Euro. Euro also, they have their daytime at the same time with the London session, which is, you understand what I'm trying to say. Now, why do they call it London or New York session instead of saying something like the UK session or the United States session? Is because this is the popular city within this country. So popular city in the United Kingdom is London, but the most populated city in the United States is New York. So that's why they actually coined it from there. And these are the driving force of the market. Wherever there's more population, there's more money circulating. So you understand the whole thing. Now, I've not talked about Tokyo and Sydney session. Now, Sydney is a place in Australia. Australia uses the Australian dollar, and Sydney is the most populated place in Australia. That's why it's called the Sydney session instead of the Australian session. So this pair now, for me, I have that session within the night time. So this pair really moves within the night time. Same with Tokyo session. Tokyo is the most populated, or is it the capital of Japan? Tokyo is the capital of Japan, and that's the most populated place in Japan, right? So that's why it's called the Tokyo session. So if you check within the night time, I want you to do this within yourself. If you check GBP JPY or if you check Euro JPY, you find out that these pairs can move in the night. They move in the night. You find out that they'll move within the Asian session, but places like GBP, the Euro USD, they will not move within the Sydney session. You just see like little candlestick to indicate, you know, consolidation and all of that. So by the way, this is something that you need to know so you don't go ahead and placing trades anywhere and anytime. So by the way, if you guys find value in this video, make sure you hit the like button. If you're not yet part of the family, make sure you hit the red subscribe button. And with that being said, I'm gonna see you guys in the next one. Peace out.